Good morning or afternoon. This is Pam with the Home
Good
Gurus.
afternoon, everyone.
Hey, Mr. Robert. For people who don't know, I'm Pam with the Home Gurus.
And I'm Robert Schoonover with the Home Gurus.
So,
How
Mr.
are you
Robert,
enjoying
tell
this
me.
weather?
Oh no, I'm freezing. I don't like the weather. I'm ready to go south for the winter. But I heard since you have just
Mhm.
lived everywhere, you were a little bit smarter than some of us because my driveway is covered in snow. So, what did you do?
I was out there shoveling. My whole neighborhood, everyone has snow on the driveway, but I'm the only one with the cleared driveway. But nothing to really celebrate because the roads are still icy and snow. So I'm used to areas that clear the roads, but they don't do that down here very well.
No, no. Um, so did you shovel it yourself or did you have your kids do it?
That's one of the things where I go out there and just get it done. I have tons of kids who can shovel, but it's just a little easier, and it's just me out there, a little me time. So it's kind of
Oh,
good.
okay.
I
Okay.
I am definitely ready. I don't know about any of our listeners, but I'm ready for the kids to go back to school. They're getting stir crazy. I'm getting stir crazy in here. I'm ready to just get out there. The snow needs to get out of here.
Yes, I'm ready for the faucets to quit dripping because that is just getting on my last nerve right now. Just hearing drip, drip, drip all night long. I have to sleep in earbuds so I can turn it off so I can go to bed.
Mm.
Whew, it's bad.
Well,
So what else have you and your kids been doing? Any snowmen? Any snowball fights?
actually, yeah, they made a nice igloo out there. I can't fit in it, but one of them can, so it's pretty decent size. No snowman, but the fights, of course, because they're kids and everything. Luckily, I've avoided it, and they haven't thrown anything at me just yet. What about you?
Well, other than taking my dogs out, instead of them looking at the window saying, I'm not going out there to potty, I'm going to do it right here. I haven't really ventured out much. Just we Jeep and had fun the first day for a few minutes
Mm,
and stopped by and see my mom and dad. And then we came
nice.
back home and have stayed inside ever since.
Yes, if you don't have to go out, definitely stay indoors. Less traffic out there, the better.
Yeah, I heard there are wrecks everywhere. They say Goodman Road is covered in a sheet of ice. So if you're driving down Goodman, they say stay in the middle, which I don't know what that means. Somebody's going to come across you sooner or later. So if you don't have to get out there, I would say just stay indoors one more day at least.
Yeah, safe than sorry.
Yes.
All
So
right,
what are we
some
going to do today?
I was just going to roll into that. Some of the things we're going to talk about today is let's go back. There we go. Topics for the day. We're going to talk about the market. We're going to talk about how to avoid common mistakes after applying for a mortgage. And we're also going to talk about the housing market update and the inventory. Let's start off with the market. These are frequently asked questions that we get from you guys. And if you ever have any questions, feel free to reach out and we'll try to answer them for you. The first question is, what are the different types of mortgages available? Uh, I'll go ahead and answer that one, Pam, if you don't mind. The mortgages available, it depends on what you qualify for. We have conventional loans, is just your normal, typical loan. There's FHA, and that has its own benefits. VA loans for any military affiliated, and we have USDA loans. Now, there's different qualifications for each. With the max loan amount, I think we talked about this in a little bit. Um, so we'll wait to kind of dive deeper into that. But each loan has different limits and everything and different qualifications. Um, with those loans, though, what kind of interest rates are we seeing, Pam?
Well, it depends. There's a lot of factors in there, and obviously you and I are not lenders, but
Mhm.
we're seeing rates as low as 5.75, which is a drastic drop just from 2 weeks
Yes.
ago. So that is actually benefiting our buyers right now because it's making it's making your mortgage more affordable,
Mhm.
or you can get more house for your money. these rates right now.
Yes, it just seems like it was last week we were in the mid sixes, and now we're seeing high fives. So that's great.
Yes.
With that, though, comes some challenges. I know when the rates are going down, we start getting more buyers that are interested, and you start seeing a little bit more of a feeding frenzy. So prepare for that if you're getting into the market. What are the differences? What's that?
I said definitely. Right now is a good time to jump if you're ready to jump into the market before everybody else does.
Yeah, definitely. If you want to try to beat out that competition, definitely give us a call sooner than later, and we can get it started. Now, what are the differences between a fixed rate and an adjustable rate mortgage?
Okay, so a fixed rate sounds just like it is stated. It's fixed. For the entirety of the loan. You are at a fixed interest rate. It cannot go up. It cannot go down. It stays exactly as you sign off the day that you get the loan. An adjustable rate is one that today it's based off the market. This is going to be above my pay grade too. I'm just going to go ahead and say that. But it's based off of the government's interest rate at the APR at the time. So it can be today, it can be low, and then in a year, it could jump and be double digit. So if you have the option, I always say go with a fixed rate because you always know your payment and you're comfortable with paying that rate. I have seen some of my clients that had adjustable rates and they started off, at 5.75, and they thought they were doing really good because the interest rates were 7.5. And then it turns out they are now 12.5 and going, oh my goodness, how am I buying this house? So that could be something that you really want to take in consideration before you would agree to that type of loan.
Yes. You're kind of just almost hoping for the best. Now, if you need an adjustable rate mortgage at the time, that's something that is a factor and we'll move forward. But, always try to refinance and get the fixed whenever you can, for sure. How much of a down payment do I need for a mortgage? Now, each down payment is going to differ between what kind of loan, the types that I mentioned earlier, you're going to get. For the USDA and the VA is going to be 0%. USDA is going to need owner occupied, meaning you need to stay there. The VA is going to be owner occupied also, but it's for military veterans. FHA is going to be 3.5%. And that also is owner occupied, meaning the individual getting a loan is going to be staying at the house. That's for the residents. And conventional is going to have some options there. You're going to have 3% for your first time home buyers. And you're going to have if you're not a first time home buyer, it's going to be 5%. But this can be changed to as much as you're able to put down on really any of them. Typically, you want to aim for 20%, but the interest rates that I mentioned, or the minimum down, that I mentioned, is kind of the minimum. So if you can afford more, down payment, it may behoove you to do so. But talk to your agent, talk to us, and we'll figure out a good game plan that works for you.
Hey, so let me ask you this. What if I have more than, if I'm going a VA or USDA and I have more, I can put money down? Am I allowed to do that?
Well, what the money down is not required, but you can always put money in addition to the purchase price. Does that answer your question?
Yes.
Okay.
I'm just making sure that we can always do that. Yeah. And then, you were talking about owner occupants, but sometimes we come along with investors. And so investors aren't going to stay, and they usually go with the conventional loan. Right. But that they do ask for 20% down if it is not owner occupant. Correct. So that is one thing to keep in mind if you are some of our investors out there are thinking about investing.
Perfect. How long does it take to get approved for a mortgage?
Can I answer that one?
Sure.
Well, sometimes it can take a while depending on how how many documents you have to put over, and what lender's helping you. We have lenders that can get you approved within the day. They just work really great with us, so we have our preferred list. But if somebody drags their feet and takes longer than 5 days, you might want to find a different lender because they're not getting things done fast enough. That should be kind of a red flag for later on, unless if you have a complicated file.
Right. And what can help with that is if you have the proper documents, right? That would kind of hasten the process. If you're still needing, if they need pay stubs, which is one of the documents that you need, and you don't have any, and it takes you a week or two to get your pay stubs, then obviously it's going to slow that process down. What other documents other than pay stubs would you need to apply for a mortgage, Pam?
2 years worth of taxes. They like to see those. Your taxes for the last 2 years. They're also going to want your bank statements. Just because they need to see what kind of cash on hand you have or where you are financially, not to be judgmental, not to ask so many questions, but they have to be, taking out a loan is a risk for the lender,
Yeah.
and they need to know that their risk is worth it. So they do ask for a lot of documents. Another thing I want to throw out there is that once you get pre-approved, that's not the only time they're going to ask for documents. They will ask throughout the process. And I get a lot of my clients are like, "Pam, please," they just asked for this.
Yep.
They want updated documents all the time. So you're going to have to give them. And I tell my clients all the time, they're going to even know your blood type by the time it's done, but we're not going to go anywhere until we get that done. So it helps just to go ahead and know that when a new bank statement comes out, they're going to want that. When a new pay stub comes out, they're going to want that. So they will ask for updated documents throughout the process.
That's right. Updated documents. Perfect. And you had mentioned pay stubs and tax documents. You said 2 years for that. Is there any difference in those requirements if I'm a W-2 or a 1099?
W-2s, usually you can just hand them your W-2, show them that. A 1099 is different. I'll just say this. I'm a 1099, so I understand the heartache it comes when it goes to when you try to go get a loan. So they're really going to want your taxes more than ever on that because they need to see how much you have written off. Now, for all our truck drivers out there, don't fret. If you are paid by the mile and you're a 1099, or if you are a contractor, we have other loans, not just the standard ones that we can help with too. They're called bank statement loans, or an in-house bank holds the loan for those that have businesses. So if you are one of those special cases, give us a call. We'd love to help talk you through it.
Yeah. Awesome. I think we answered all those questions. Don't forget to keep those questions coming in so we can update. We might answer it next week, but it'll be up here and we'll answer your questions. All right. How long is the term of a mortgage? Now we see two different terms depending on which tactic we're going for and what we're trying to get qualified. We'll see a 30-year mortgage and we'll see a 15-year mortgage. Closing costs.
So what are the benefits of a 15-year versus a 30?
Well, your payments, if you're able to stay afloat per se, if you can pay the 15, you're going to pay it off faster. You're going to earn the equity. But sometimes with the house price, you can't necessarily pay that 15-year. You would utilize the 30-year. Now you're going to earn the equity a little sooner, it's going to take you longer, but it's more manageable payments with that, and you're paying it off in 30 years versus paying something off. Just think about your car. If you're to pay it off in 15 years versus 30 years, it's going to be drawn out a little bit longer. Closing costs. Let's talk about closing costs. What is the closing cost for a mortgage?
There are several.
Yeah. And your closing costs are going to vary depending on the property you are purchasing. But closing costs are going to comprise of your lender fees, attorney fees, Also, you can throw in your escrow and everything. Is there anything else that you can think of that is in the closing costs?
No, and let's kind of define what escrows are, because that maybe some new clients are out there that don't know what escrows are. And that's going to be your homeowner's insurance and your property taxes. So they take those halfway, and it depends on what part of the year you purchase, but there has to be enough in that escrow account. So when the bill is due, the mortgage company pays those property taxes and they pay your homeowner's insurance for you out of that account. And so they want enough in there to cover.
That's true. I know some people out there get confused with that, and they know the term prepaids, and it would be essentially that's the same thing, just a different term for it. What are the penalties for prepaying a mortgage?
That's always on that would be on what is considered your settlement statement or your loan terms. 9 times out of the 10, there's no prepayment penalty. If you do a specialty loan, there may be, but normally they don't do that because every lender likes to be paid back quickly. Mm-hmm. So, but that would be something that at your closing, when you said you have attorney fees, they do the title work, they file everything for you. But when you sign the papers, they explain everything, and they do explain the terms of your loan, that it's a fixed rate, or if it's an adjustable rate, or if there's prepayment penalties or not. So they let you know those things on the front end as well. So does your lender.
That's right. And if you're not getting all those answers from your lender that you're seeking, that you can always shop around for a lender that works best for you in your situation.
Or hire really good agents like ourselves, and then we will find those answers for you.
Can I qualify for a mortgage if I have low credit score? It depends on what you're meaning by a low credit score. Some people think your 600 is a low credit score, and to answer that would be yes. I've seen 580s get approved, and actually a few that are a little lower. It just depends on your income, what your bank statements and your whole picture, so to say, and everything to get approved. So if you were above, I'd say a 500, talk to an agent, and we'll see if it's something that can be done. Do you agree, Pam?
Yes, I do. Sometimes with the lower credit score, understand that in those fives up to the 580, your down payment may be more than the typical down payment because they just want a little bit more skin in the game. So there are ways to do it.
That's right. So just always reach out to us, and we'll be able to help you and give you, guidance and direction. But don't be scared if you are in those fives. It doesn't mean that you can't get a home in certain circumstances. But typically, anything of 580, as long as your debt to income ratio is good and your income is pretty solid, you're good to go. Where are we at, Pam? Let's see.
We are. How much is the maximum that I could borrow? That's a really tricky question, isn't it?
Yeah, it is. It depends on the loan that you're getting. It goes back to that first question. So there's all factors that you need to think about in what strategy you're using to purchase this home. For USDA, it's going to be solely based on your income and your debt. They factor that in to see what your max loan amount is. VA doesn't have a max loan amount. FHA, last I knew, was 472, but that could have gone up by now. I think that was last year's numbers.
It is. It has gone up, and I want to say it's just under 500.
Okay.
But there are now jumbo loans. So if you do one in the higher price point,
Mm-hmm.
we can go through with the jumbo loan. Lots of lenders are doing those. But honestly, it still all comes down to how much do you want to pay a month? Because if your numbers look great and as long as your debt to income is low and your income is high, you could possibly get approved for $1 million home. Now, I don't know about y'all. I just don't know that I think I want to pay for $1 million home.
That's true. I want one. I just don't want to pay for it.
Yes.
All right.
So
go ahead.
So on that, we were talking about some of our fees earlier, closing costs and stuff, and then we talked about how much down, how much to, the terms of our loans and the different types. So what is private mortgage insurance, Robert?
Private mortgage insurance essentially protects the lender, and it is going to be required from the lender if you do not put it down 20%. Of the home's worth. It doesn't mean 20% of the loan. It's of what the home is valued at. And if you're taking a loan more than 80% of that, then you're going to require private mortgage insurance. Something that the banks want to protect themselves, and it's required.
So basically, bad things happen to good people, and the government just has a big, huge pot of money that they take this private mortgage insurance and put it in there so that at the end of the day, they can turn around, and if somebody forecloses, they can pay that off without the rest of the economy going crazy. But that, I don't know if you realize, on conventional is the only one that you don't have to have private mortgage insurance on if you put 20% down. If you went FHA or VA, you're going to have that private mortgage insurance for the entirety of the loan. It doesn't change. It will always be there. Conventional is the only one that drops off.
Yeah, it'll slowly go down. And once you're at the 80%, it doesn't just magically go away. You can contact your lender and request removing that PMI.
It will eventually. They just don't do it right off the bat. So say that you've paid down and you're a good steward of your money. So you're watching it, and now I have 20% equity in my house. They will still charge you that PMI for a couple more months until the paperwork comes across the right desk for it to drop off. So it is a good thing to watch it and make sure that when it comes time, it does come off.
That's right. I am going to go back a little bit. We just had a question come in that says, how much do you need for closing costs typically, like a range? And we did cover the closing costs, but we didn't really cover that range thing. And give or take, depends on what house you're getting, but it's going to be around 10% is a good, and that's for everything, all your closing costs and prepaids. Give or take. All right. More frequently asked questions. Is now a good time to buy? Yes, it is. We just had the rates go down. Pam, you mentioned it before. It was a week ago. I mentioned it was in the mid 6s, and now we're seeing high 5s. With that, we mentioned the feeding frenzy. More people are going to buy. So you need to you want to beat out that storm. A lot of individuals are going to have tax money come in, and everyone's going to be ready come springtime. So now you want to start the process to be ahead of that. Don't miss out on that home you want because of the competition. Now, Pam, is it a good time to sell?
It is definitely a good time to sell. We're seeing that the ones that are pre-approved now have to buy. They want to buy, and they are trying to get ahead of everything else. And since the inventory is still low, we can actually get in there, get on the market, put our best foot forward and get sold quickly. We're still seeing homes go within a week to even, and it may take up to 3 months. So it just depends on the price of the house and how and the condition of the house as well.
That's right. The price range is definitely a big factor. Not a lot of people right now are looking for $1 million homes in this area, but the 200 to 300 with the families and everything, that's a big hot market. So you're gonna have more competition. So it does depend on what house range you're looking at.
Do you know why that is, Robert?
Why? What is?
Why the 200 to 300 range is really hot?
Because I know typically that's a good starter home price on that lower end, and then the higher end. This is DeSoto is a big family area, and so that's just the price range of where you're at.
So, do you realize that in the 200 to 300,000, that you're renting an apartment or renting somebody else's house and paying the same mortgage as the same rent as mortgage? That's what I've been seeing.
Gotcha.
Most of my clients they come in and they ask me, they say, I'm okay with this. This is what my rent is. And I'm like, oh my goodness, look what we can do. And they're like, I did not know that. So yes,
for virtually the same price, you're saying that they can get equity in a home instead of paying someone else's?
Yes, they can start building their nest egg and their own wealth, which is, I think, is one of the best benefits of home ownership, is because now you're building your own net worth there.
Yeah.
Hey, we got a question that said, if my lease is up in June, how early should I start looking or planning to buy?
Really, the process starts now, because we need to go through and we need to figure out a game plan. Really, it depends on your financial situation. And everything. And it's never too early to start. If we find out that you are good and we need to wait out a little bit, then so be it. But the earlier you get with us, the sooner we can find out what the plan is and how we move forward.
And I've even seen that if they come in early, like now, we can even go ahead and start looking, if we get our credit pulled and talk to a lender, there may be a few just small little tweaks that we could do to up their score just a little bit more to get a higher purchase price. And so if we get started on the front end and get ahead of the problems, we can go ahead and get out of that lease. Now, also, do you know that when we do start, you pay rent the day you move in. So you pay your rent on the front end, right? Mortgages, your monthly mortgage is paid at the end of the month, at the end of the time you move in. So even if you have your lease is up in June, say June 1st, you have to be out. Well, if we find you a place, you've already paid May 1st, so we have 30 days right there, right? So if we can get you move in, you moved out of your apartment, you don't have any penalty days left, your first payment will not be June, it will be July, because we moved in May, so you won't have a payment till July. So you get 1 month living free is what I tell people. So even though you don't think you're it's far out, it sneaks up on you really quickly. So come in today and let's talk.
Perfect. Yeah, that gap in payment can be used strategically, and that's why you need to get with us, and we'll help you with that. All right, avoid these common mistakes after applying for a mortgage. Don't deposit large sums of cash. Lenders need to source your money. They need to know where it's coming from, and they need to know if you're not getting like a jumbo loan somewhere and you're going to have to pay that back. A lot of times, even a letter, if you do get a large sum of money and it's unavoidable, I know a lot of times a letter saying, hey, I don't owe this money, this is my money, suffices, but it's better just to avoid all that. huge, just random large sums of cash deposits, although nice, can be unbeneficial. That's not the right word.
Well, basically, don't have cash on hand and put it in your mattress and then say, Pam, I've got my down payment, because we can't source where that money came from. It could be the government says, it could be drug money, it could be whatever kind of money. They don't know. They want to know where it came from. Not that you're saying it's illegal money, right? But they have to know that you basically didn't get a loan from a friend, put it in your account, so now that you have to pay back your original loan and the loan to the friend. So they're just making sure, a lender is making sure they know where all the money came from.
There has to be a money trail.
Yes.
All right. Don't make any large purchases. It's not just home-related purchases that could disqualify you from a loan. Any large purchase can be red flags for lenders. People with new debt have higher debt-to-income ratios. How much debt you have compared to how much monthly income, that's your debt-to-income ratio. These large purchases, and we're not talking about just another home or even a car purchase, and that happens a lot. Don't make any of those purchases. But even clients under contract get excited for their new home. And what do they want to start doing, Pam?
They want to buy appliances, a new refrigerator, new washer and dryer. Oh, honey, I need a couch. And oh, did you see those lamps over there? I'll just put it on my credit card.
Those are beautiful lamps, but it affects your debt to income ratio that they originally calculated before. Don't do it. Just wait. Resist the temptation to make any large purchases. Got anything else to add to it?
Not that one.
Pretty self-explanatory. Just hold those urges. Don't change anything that will mess with your debt to income ratio. All right. Avoid these common mistakes after applying for a mortgage. We're going to continue with that with don't co-sign loans for anyone.
Do you know why?
Well, because you're held liable, and it does go on your credit and everything. I feel like this is even outside of applying for mortgage, case by case basis. But that's just me. Anything?
Well, basically, you have agreed. If you co-sign, you have agreed that my friend, my daughter, and I say that a lot. Parents are suckers. I'm not saying that their kids don't need help nowadays, but that's the first person we all help is our children. But if we're saying, if my child doesn't pay this, I will pay it. And so now any lender is going to count that as part of your debt. And that you keep saying debt to income ratio, people call it DTI, and there is a limit that you can have with a loan. It can't, when you go apply, it can't be over an X amount. And they also add, just say you have your credit cards and your car payment and they're very low, but you're close to it. They also add what your mortgage will be, and it has to stay under their max number for that type of loan. So keep that in mind.
Yeah, it's just because if you co-sign for a loan and the other individual is wholeheartedly going to pay it, the banks don't go off of that. They go off of worst case scenario. You're going to have to pay for it, and so it is part of your debt to income ratio. Don't switch bank accounts. This kind of follows that they need to have that money trail. And when you're switching bank accounts, that could be affected. Lenders need to source and track your assets. That task is much easier when there's consistency. So that no large deposits, don't, switch bank accounts and everything. You can move money to where you need it through your banks to try to consolidate for that, but because there's going to be a money trail with that. But just know that you're going to have to show your lenders, the ones that get you the loan, all those bank accounts so they can follow the money.
Yes, and those documents we said you have to update regularly all the time. So the more accounts you're using, the more paperwork you're going to have to update. So that's another thing that you keep in mind. Now, is it okay that I have a savings account, a checking account, and a money market account? Definitely. You can have all of those. But what they're saying is don't get mad at this bank, shut it down, pull your money out, walk across the street because they have a better incentive today. Stay at your same bank. And just until your paperwork's done, until you moved in the house, and then you can go get the new incentive. But as of right now, just wait it out. But if you do have those savings and money market accounts so that you have money stashed so you don't spend it because you were waiting to purchase a house, that is okay to have. You don't have to have just one single account.
Yeah.
It's just better to have money. Just know that with all those accounts, you're going to have to update that paperwork regularly with the lender.
And we're going to take a short timeout from these slides. We had another question come in. It reads, how do I know what my home is priced at? And then they continue with Zillow estimate. So what Zillow does is just a computer program that essentially takes a whole bulk area of the whole area and kind of gives you that price point. Unfortunately, there's a lot of error in that because it's nationwide. So what one market doesn't necessarily affect our market. And with the area here in North Mississippi and in Tennessee, the Memphis area, we have smaller areas within the big area that is affected with price points. And with that, the agent needs to go in there. We can go in there and we can do a CMA, comparative market analysis, and give you a good idea of what your home is worth. That's why you should always give us a call. We'd love to come out and talk to you about what your home's worth and everything there.
Hey, Robert, fun fact about Zillow, they have a disclaimer at the bottom. They can be right or wrong, plus or minus 20%. So they give themselves
that's a big percent.
Right? Just think about that on a $200,000 house. That could be 40 grand you're leaving on the table. And you don't want a computer telling you what it's worth. You probably want somebody that is educated in the market that can tell you exactly what it's worth.
Yes. All right. Continue on with avoiding these common mistakes after applying for a mortgage. Don't apply for a new credit card. Again, this goes back down to the debt to income ratio affected. But with the credit card, it doesn't necessarily mean that you're using it, right? You just applied for it. But what that is it's affecting your credit. You're getting a kind of a hit on your credit. And if you do get that credit card, the bank sees it as your ability to put more debt in on your credit score. And again, like I said, it can lower your credit score, which determines your interest rate, which overall is what we're trying to keep low to save you money in the long haul.
But Robert, they already ran my credit. They don't have to run it again. Why does that matter?
What do you?
They do have to run it again.
Yeah, every time you apply for the new credit card. That's why I was confused on they already ran your credit. Yes, every time you apply for a credit card, they're gonna run your credit. And I mean, I said you get a hit on it. Well, what I mean is it kind of gets flagged, and your credit score can actually go down just by applying for all these credit cards. Yeah.
And a lender still may get audited on their files. And so even day one, you started the process and you had your credit pulled. Day 32, right before you close, they may be audited. And then they have to recheck your credit score so it can show back up. It's not a one. Lenders don't do it a one and done. You applied and you're good today. And also know they even verify your employment the day of when you're signing papers. So those things are to keep those things in mind. You don't want once you apply for a loan and get approved, you do not want to do anything. I tell everybody, do not pass go, do not collect $200, do not apply for anything, do not buy anything, buy your groceries, buy your gas, and let's just sit still like a little turtle and let's wait until everything is done so that we don't mess up anything at the end of the day.
Like it's nice. Just be stuck in your house like it's winter outside and dangerous. Don't close any accounts. So not only are we trying not to open a bunch of new accounts, we're also trying not to close any accounts. Why would we not want to close any accounts, Pam?
Well, lenders take in effect just how long have you, not just the history, your payments, but how long have you been paying on this account in good standing. They also want to know the length and the depth. Like just having 4 credit cards doesn't always help you. Sometimes it helps to have a car or different things, but that's a lender. A lender will tell you exactly what they need. But they just want to know that you've had it for a long time and that you are good with your history of it. So if you just say, I have one card that has a $500 limit that I just got a year ago, right? And I don't really have much on it. And I take my tax money and I go pay this card off that has a higher interest rate that I got 30 years ago, and pay it off and close it down because the one a year ago has a very low interest rate. That's going to hurt me in the long run because I just lost 30 years of history that was reporting.
That's right. You want a long history to show. Now, unfortunately, credit score and everything is how good you're good at borrowing. And if you don't need to borrow anymore, that doesn't mean to just close everything out. You still need to maintain it. Have that credit card paid off. And even when it's paid off, a good idea is to use that to your advantage. Call them and lower your interest rate on that card and everything. But keep it. Even put $50, just a month just to keep maintaining it and keep paying that off. It actually is more beneficial than closing it out.
What I like to tell my clients is, you're going to buy groceries, you're going to buy gas. Best thing to do is go put it on your credit card, get frequent flyer miles or hotel discount points or whatever, and then go home and pay it off. You've already got the cash in hand. Just keep it at a point where you can pay it off and get some benefits too.
That's right. Use it to your advantage. Don't discuss changes. Do discuss. Definitely 100% do discuss changes with your lender. I think I need more coffee and it's 12:43. I don't know. It's the staying indoors. I need to get out of this house. Be upfront about any changes that occur or you're expecting to occur in the future when talking with your lender. Changes in income, assets, or credit should be reviewed and executed in a way that ensures your home loan can still be approved. It's just being smart with your money and try not to affect your debt to income ratio.
Definitely. If you think that there's something they're going to find out, go ahead and talk to your lender. True story. I had a client that told me they sold had been renting and they thought that they sold their house back to the bank. That's what we found out. It wasn't really sold back. It was foreclosed. So it came up 3 days before closing. And here we are. We've done a home inspection, earnest money, done everything, the appraisal. So my clients are out of money, but they can't buy. And if we would have just known on the front end, we could have worked around that. And we did. It only took a couple more months after that, and they were able to purchase a home. But knowing those things on the front end, just little things. And if you think they're not important things, go ahead and say them. Tell everything because it's going to come out in the wash. It always does.
Yes, and you mentioned earlier that even the day or two before closing, they can pull everything just to ensure that nothing has changed And that's not when you want to find stuff that has changed. So be honest with your lender. That you're still able to most likely move forward if you're honest, and they can kind of work things out. But those changes being found out last minute, there's nothing to do but cancel or postpone closing. All right, let's talk about the market update, the inventory. We kind of touched on this earlier. There's low inventory out there. We got a lot of buyers. We're actually going to have an influx of buyers coming, when it's nicer out. But we roughly have a 3-to-1 ratio right now, 3 buyers to every house out there on the market. And why is there a slight uptick in inventory, Pam?
Well, right now, the only reason would be because agents can't go out and show houses, right, this week. But I do have the actual numbers for this previous week. Perfect. We sell Mississippi and Tennessee. So in Mississippi, in the past 7 days, we have 514 new listings. 493 went pending, and then we had 233 close. On the Tennessee side, it was a little slower. We had 269 new active listings that went on the market. Only 150 went pending, and 177 were closed. So the inventory is still very low, but there is a lot of activity. So if you're an active looking buyer, it's still good. They're coming on the market. We're seeing houses come back on the market, new listings coming on the market. So there is going to be a house that fits for you. Just don't drag your feet, because as soon as they're coming on the market, they're getting sold too. So you need to be very proactive and be out there looking. Your agent is definitely helping you do that. So that's what I started seeing.
We also have everywhere especially DeSoto County. There's a few up in Memphis, but new construction. They're popping up all over the place. And with that, they do have great incentives. Now, each construction new build company has their own incentives, really. Some of them, you'll see them paying closing costs. And so it just depends on where you're looking to find out which build. Now, Pam, do you know of which builders are doing what incentives right now?
They're, like you said, they're all doing different ones. We have some that are paying $12,000 toward buyers' closing costs or buyers' buy down points. So they'll buy the interest rate down for the buyer at the moment. We have others that have personal in-house lenders that they can get an even lower interest rate there, and incentives. Some are offering to do fences. Can you believe that? They have not offered, every time you have a new construction, they don't want to put in a fence or a refrigerator or blinds, but we're starting to see that if you have the ability to ask in new construction, where we have not been able to ask for, about 3 or 4 years now, we were just laughed at.
Yeah, it's been a while now to where you weren't able to get those incentives. So reach out to us, get with us, and we can start the process. Open houses. That's kind of slow this weekend. I think everyone wants to get out of the house, but it's just unsafe. So we aren't hosting any open houses that I do recall. Pam, do you agree?
None that I know of. However, if you would like to see anything, there's a good chance we do have videos. So of our listings, let us know if you're interested, because we sure would be happy to do some kind of a virtual open house for you and let you see the house without having to leave the comfort of your home.
That's right. I'll go out there. I got a big old 4x4 lifted truck to traverse the elements to get to there, and I'll do a video tour if that's what you need. We'll get out there, and you can stay safe in the home. Now, the benefits of an open house. Now, we don't have one this weekend personally, but it gives your home exposure. If your house is on the market, and we're always trying to push open houses. They get the community to come in. You get a lot of your neighbors that are interested, and your neighbors know people. And also, it's less stressful for a family to come in. You say there's a 2-hour open window. You can come in anytime, walk around, and you see the house. You don't have to get with your agent and everything to schedule that. You just come look at the house and go. So it gives your home exposure. That's one of the biggest benefits to having an open house if your house is on the market.
As a buyer, though, the benefit of going to open houses also would be to get the feel of that house. And if you're kind of trying to figure out, do I want to go up in price range or not, you can go look at a couple of houses that are above your price range, knowing that you could, if you can get approved for that much, and you can get a feel for the different price points of the market. So a lot of times you may look at pictures online and think, I don't know if I'm going to like that one. Well, this is an invasive way to go in to look to see if you like the house. Does it feel like something that you could live in? Can you picture yourself there? So I think for buyers too, that's a great time to go look at houses.
It sure is. We did have a question come in that we kind of were like just talking about, but I want to kind of reemphasize it. The weather is unsafe, and we're all willing to go out there and show you these houses virtually. You can always give us a call. Our office is 662-892-4077, or you can email us or text us at any time, and we'll reach out to you.
You can even do it in the comments down here. We would love to get back with you on Facebook as well. If you can't remember all our contact information, but just click on there and let us know, hey, I'd like some help. We'll be happy to reach out and help you today.
That's right. And with the email, do you know if the gurus have a general email?
You can go into it's kind of simple. We're just going to bombard Jennifer today. So we'll go into Jennifer, JENNIFER at yourhomegurus.com, and she will help us connect.
Perfect. All right. The opportunities, kind of harped on that. That was on the buyer side. Get a feel for the home. I'll let you shop current homes. Anything else to add?
No, sir.
Yep. Kind of touched on that. All right. Wow. Okay. I was ready to keep going.
We have 2 websites as well.
Yep.
And somebody just asked us to share our websites. So we have, and I am not sure. I hate that I just said I knew them. Northwest, okay. NWMS at yourhomegurus.com for the Mississippi side. Oh, never mind. I got it. Just yourhomegurus.com. yourhomegurus.com, and that will get us straight into contact with you.
Oh, yeah. From there, you can select if you want the Mississippi side or the Tennessee side. All right. Other than that, thank you for watching. I don't know about you, Pam, but I've had a great time.
I did too.
Ready to get out of this house, and I hope the kids go to school tomorrow. I am, grateful that you guys are watching, and I'm glad to be here.
Glad to be here.